Banks are at the heart of our financial world, yet most of us don't fully understand how they operate. What if I told you that the system is designed to benefit the banks, not you? What if you could turn the tables and use their own strategies to build your wealth? Today, we're uncovering 9 secrets that banks don't want you to know. These aren't just facts, they're strategies you can use to transform your financial future. Stick with me, because by the end, you'll have the tools to take control of your money and make it work for you. Spoiler, I put the most important and fundamental secret at the end of this list, so stay until the end to find out. Secret 1. Your savings are making the bank rich, not you. Think about what happens when you deposit money into your savings account. You feel secure, knowing it's safely tucked away, earning a small amount of interest. But what you might not realize is that your money is being put to work for the bank, not for you. Here's how it works. Banks operate on something called the fractional reserve system. For every $1,000 you deposit, the bank keeps a fraction of it, say 10%, as reserves. The other $900? It's lent out to other customers at a much higher interest rate. Imagine this cycle repeating itself over and over. Your $1,000 can effectively turn into $10,000 circulating through the financial system, all while the bank earns interest on the loans it's issuing. Meanwhile, you're left earning a paltry 0.01% on your deposit. Let's put this into perspective. Suppose you have $10,000 in a savings account earning 0.5% interest. After a year, you've earned $50. But if that same $10,000 is loaned out at a 5% interest rate, the bank earns $500. Multiply that across millions of customers, and you can see why banks are raking in profits. What can you do? Don't let your money sit idle. Invest it in assets that grow over time, like stocks, mutual funds, or even real estate. For example, if you had invested that $10,000 in an index fund averaging an 8% return, you'd have $800 at the end of the year instead of just $50. Use your money to build wealth for yourself, not for the bank. A very quick method to start building wealth is by subscribing to this channel in order to understand more and more how to grow your business. Secret 2. Banks love it when you're in debt. Debt is a powerful tool for the bank. Every time you take out a loan, whether it's for a car, a home, or even a credit card, the bank is earning interest, and they want to keep you paying that interest for as long as possible. Let's break this down with an example. Suppose you have $10,000 in credit card debt with a 20% interest rate. If you only make the minimum payment each month, you could end up paying over $20,000 in interest alone before the debt is cleared. That's how banks make their profits, by keeping you in a cycle of debt. Here's where things get interesting. Banks often target those who are financially vulnerable. They offer enticing credit limits, promotional interest rates, and rewards programs. But the moment you miss a payment or carry a balance, the interest rate spikes, and you're trapped. How can you turn this around? Use debt strategically. If you're going to borrow money, make sure it's for something that will generate a return, like investing in a rental property or starting a business. And always prioritize paying off high-interest debt first. A practical tip: try the snowball method. Pay off your smallest debts first to gain momentum, then tackle the larger ones. This approach not only saves you money, but also builds financial confidence. Secret 3. Your bank is not your financial advisor. When you walk into a bank, the staff are friendly and professional, ready to help you with your financial needs. But here's the catch. Their primary goal isn't to help you. It's to sell products. Banks are businesses, and their employees are trained to offer services that maximize the bank's profits, not yours. Let me paint a picture for you. Imagine you're looking to invest $50,000. You ask your bank for advice, and they recommend their own mutual fund. Sounds good, right? But what they don't tell you is that the fund has a 2% annual management fee. Over 20 years, that fee could eat up tens of thousands of dollars in potential returns. Instead of relying solely on your bank, educate yourself about financial products. Compare options, look for low-fee investments, and consider consulting an independent financial advisor who has your best interests at heart. Remember, the more you know, the better decisions you can make. Secret 4. The wealthy pay less for loans. If you've ever wondered why the rich seem to get all the breaks, here's one reason. They pay less for loans. Let's take Mark Zuckerberg as an example. In 2012, he financed his $6 million home with a 30-year mortgage at just 1.05% interest. Meanwhile, the average person was paying nearly 4%. Why do banks offer such favorable terms to the wealthy? It's all about risk. Lending to someone like Zuckerberg is almost guaranteed money for the bank. He's unlikely to default, and even if he did, the bank could easily recover their money by selling his assets. For the average borrower, the risk is higher, so the interest rate is higher too. What's the lesson here? Work on improving your financial profile. Pay down debts, build a strong credit score, and increase your income. When you're seen as a low-risk borrower, you'll have more leverage to negotiate better rates. Secret 5. Banks use overdraft fees as a profit machine. Overdraft protection might sound like a helpful safety net, but it's really a moneymaker for banks. Here's how it works. Let's say you overdraw your account by $10. The bank charges you a $35 overdraft fee. That's effectively a 350% interest rate on $10. To avoid falling into this trap, opt out of overdraft protection. Monitor your account balances regularly and set up low balance alerts. If you're prone to overdrafting, consider switching to a bank with no overdraft fees or using a prepaid debit card. Secret 6. Banks create money out of thin air. This might sound like a conspiracy theory, but it's true. When banks issue loans, they're not lending out existing money, they're creating new money. This is called fractional reserve banking. Here's an example. You take out a $20,000 loan to buy a car. That $20,000 didn't exist before you signed the paperwork. The bank created it as a digital entry in their system. Over time, as you repay the loan with interest, the bank earns a tidy profit. Understanding this system changes the way you see money. It's not just about working hard and saving. It's about using the system to your advantage. Invest in assets that appreciate over time and generate cash flow. This way you're building wealth while minimizing your reliance on loans. Secret 7. Inflation eats away your savings. Inflation is the silent thief that erodes your wealth over time. Let's say you have $10,000 in a savings account earning 0.5% interest. If inflation is 3%, your money's purchasing power decreases by 2.5% each year. After a decade, that $10,000 might only buy what $7,500 does today. To beat inflation, invest in assets that grow faster than the inflation rate. Real estate, stocks, and commodities like gold are great options. For instance, real estate not only appreciates in value, but can also generate rental income, giving you a double benefit. Secret 8. You can own a piece of the bank. Did you know you can profit from the banking system? By investing in bank stocks, you can become a shareholder and earn dividends. Let's take JP Morgan Chase as an example. If you invest $10,000 in their stock with a 3% dividend yield, you'll earn $300 annually, and that's on top of any increase in the stock's value. Owning bank stocks allows you to share in the profits they make from lending, fees, and investments. It's a way to turn the tables and benefit from the system that's designed to profit from you. Secret 9. Knowledge is your greatest asset. The most important secret isn't about banks, it's about you. Knowledge is your ultimate weapon in the financial game. Banks count on the fact that most people don't fully understand how money works, and that's exactly how they maintain control. But what happens when you flip the script and educate yourself? You gain the power to make informed decisions, outsmart the system, and build true wealth. Let me give you a practical example. Imagine you've just learned about fractional reserve banking and inflation. Instead of keeping all your money in a low-yield savings account, you decide to invest $10,000 in an index fund with an average annual return of 8%. Over 20 years, that $10,000 grows to nearly $50,000. Compare that to keeping it in the bank, where it might earn just $1,000 in interest during the same period. Knowledge turned into action is what separates the financially successful from the rest. Now, here's how you can start building your financial knowledge. Read books. Classics like Rich Dad, Poor Dad by Robert Kiyosaki or The Intelligent Investor by Benjamin Graham are treasure troves of financial wisdom. Watch videos and attend seminars. The internet is full of free resources where experts break down complex topics into actionable advice. Ask questions. Don't be afraid to challenge your bank or financial advisor. The more questions you ask, the clearer your understanding becomes. Experiment safely. Start small with investments to understand how different markets work before committing larger sums. By subscribing to this channel and liking this video, so that the YouTube algorithm makes you see more and more similar videos and therefore better understand how to generate money. Remember, the system is designed for those who know how to navigate it. The more you educate yourself, the less likely you are to fall into traps like unnecessary fees, high-interest loans, or underperforming investments. For any questions or doubts, feel free to write to me in the comments. See you soon.